Starbucks is closing locations and laying off workers. Let's talk about why they're doing this, the effect on their customers and employees, and how it ties into what's happening in the broader US economy. So, Starbucks reported that they're closing their underperforming stores in North America, resulting in about 900 retail jobs lost. By the end of this year, they expect their overall store count to drop by 1%, so from 18,734 stores to about 18,300. Starbucks CEO Brian Nichols said the stores being closed just aren't meeting customer expectations and produce weak financial results. Starbucks plans to fix this by upgrading over 1,000 existing stores, with a focus on design, comfort, and layout to improve the customer experience. This restructuring will cost about $1 billion, including severance pay, store closure expenses, and adjustments. Starbucks is trying to adjust to a customer that's feeling higher economic pressure. A combination of inflation and tariffs is straining customer budgets, which we can see from the customer response online after Starbucks was caught secretly raising prices in June. The company now upcharges for certain custom additions to their beverages like syrups, sauces, fruit inclusions, and matcha. This equals to an 80-cent charge for these items on most drinks. Although some prices have decreased, their new system raises overall prices for customers depending on how they customize a particular beverage. Starbucks locations generally serve as a social gathering place, an office, and a library for many customers. So it'll be interesting to check on customer sentiment as stores begin to close in local communities. Starbucks is also feeling the impact of tariffs, which raises input costs. They import Arabica coffee beans from Brazil. Although Starbucks' supply of coffee is diversified, the US 50% tariff on Brazilian coffee is estimated to increase their annual costs by 3.5% and may reduce earnings by 2 cents per share, according to Yahoo Finance. Adding to this macroeconomic trouble, customers and workers are also putting political pressure on Starbucks for being left out of the decision-making process on store changes and other corporate policies. For example, a global boycott of the company started in 2023 by the Starbucks Workers United Union, relating to their stance on the Israel-Palestine conflict. There are also pending lawsuits against Starbucks regarding their in-store dress codes and DEI policies. By cutting their losing stores and enhancing their winners, the company hopes that their $1 billion restructuring move sends a message to investors that Starbucks' priority is profits over expansion. The stock has underperformed in the last few years versus its category peers. As the K-shaped economy forms, wealthier customers represent more of their market. So Starbucks is aiming to pamper this customer, although convenience might be diminished with less locations in certain cities. Now, here are some of the things to look for as this story develops. Which locations close, and are the majority of these locations found in major or small cities? Are the redesigns in existing stores helping the stores to become more profitable? What's the customer reaction to the upgrades? Has foot traffic increased? And how are Starbucks employees responding to the store closures? The company has fought against unionization in the past, so this is a key area to watch for as employees deal with inflation. We'll continue to monitor this story and see how Starbucks performs in light of these changes. Subscribe for more insights and data-driven analysis from Econopoly. Thanks for watching.